So January is right around the corner. And unfortunately, in the month of January, any divorce attorney will tell you this is probably the busiest time of the year. This is when the most filings happen. And from a lending standpoint, there's some things that you should definitely know about when you go through divorce and how you can obtain financing or obtain a mortgage. So usually when we see a divorced couple, there's usually one party that wants to remain in the property and one party that moves out. Now, sometimes this can be problematic for the person that is remaining in the property because usually they need to pull out cash to buy out their ex, but then now they have to qualify for the new loan on just their salary alone, assuming that they both qualified together. So let's talk about this real quick because there are some options here. So first of all, if you're doing a cash out refinance to buy out your ex, this is what we call a spousal buyout. So the good news is this is not considered like a typical refinance cash out. So there's not a hit. And when I say hit, like a slightly higher rate or premium when doing a spousal buyout in connection with a divorce. So, but typically what we'll do in that situation is they will determine the amount that they've agreed upon, whether it's through a marriage settlement agreement or just some sort of mitigation or verbal agreement. And then we will try to qualify the person that's going to remain in the house with that new loan amount. Now, one issue that tends to arise is because the person that now is remaining in the property has to qualify on just their income alone. So some options that we've seen is that that person will get a cosigner. So if they can get another family member that'll cosign with them for that loss of income, that's one way that they can potentially qualify for that home and stay in their existing home. Another potential option for someone that wants to remain in the home and maybe they have a good interest rate on that mortgage is doing what's called an assumable mortgage. Now, these are pretty tricky to do. Not all loans are assumable. So this could be an uphill battle, but assuming that the party that's remaining in the home, that the loan does qualify for an assumable mortgage, they can contact the servicer, see about what the requirements are, and go through that process to see if they can maintain that same loan and same interest rate. But just keep in mind, most conventional loans, jumbo loans, are not assumable. This is really going to be a small pool of loans such as FHA and VA is going to have some issues as well when it comes to the assumable. So you just want to check with your servicer on this. Another third option and final is if the couple that's splitting, nobody wants to remain in the property. Obviously, if they sell the property, split the proceeds, and then they each can go and try to qualify to purchase their own home. But look, you do have some options. I think if a divorce is on the horizon for you, this is something that, a lot of people will talk to their financial advisor or talk to an attorney, but you should talk to your lender, your loan officer, just get an idea, like prepare, see if one of you are going to remain in the property, what are your options? Could you potentially qualify if you're staying in there, or would you need a cosigner? I think if you get out in front of those things, it's just going to make it a lot easier on a process that is already stressful to begin with. If you have any questions on this, feel free to reach out. Make it a great day.